What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, I try to share with you what stocks I am watching for the week ahead, as well as how I feel about the market conditions, and that is where we are going to start. So first of all, we're going to take a quick look at the NASDAQ. As you can see here, we've been trading within a couple of channels and we came down to this 10,000 level here. We bounced off it and now we're in a slight bullish channel. You could say maybe we're testing the support area right here around 11,000 right now, but it's kind of tough to say. It's still early and we haven't really broken through any of our previous highs to show us that we're out of this long-term bearish trend yet. So I'm still a little bit hesitant, but things are looking good short term for the NASDAQ as long as we don't fall below this 10,500 level. Now, when it comes to the S&P 500, sort of the same thing. Again, we're sort of trading within a couple of channels right here and we found some resistance at 4,100. We have broken through our short-term resistance level right here and now we're either going to keep falling down or hopefully we can get back above 4,100. That's going to be the real test here. When it comes to the Dow Jones, again, sort of a similar pattern here. We're trading within some channels. It looks like we have found some resistance at a previous high. We have fallen below our support level right here. We've fallen below our moving averages here, and it looks like we're getting rejected. Only time will tell though. Now, we have a couple of things happening this week, especially the Fed meeting with US interest rates. So we're going to talk about that in just one second. I do want to touch on crypto real quick here. This is what the Bitcoin chart looks like right now over the last basically 8 months. Really, really interesting though, because this is what the Bitcoin chart looked like over the 8 months when crypto hit its major low in 2018. And the thing that I'm trying to show you here is that these charts look fairly similar. They're both basically Bitcoin following down and then leveling out. And it's really, really interesting because there's a couple of things happening here. One, these dates are almost exactly 4 years apart and Bitcoin works on a 4-year halving cycle. So that is really interesting, but we are also almost at the same level of declines as what we saw back in 2018. So December 5th, 2018, Bitcoin hit a low of $3,236, a total decline of about 84%. And on November 21st of 2022, that is Bitcoin's current low right now at 15,559. And that was a 77% decline from the highs. And again, these dates here are pretty much 4 years apart, plus or minus about 1 month. Now, kind of a unique coincidence there. I do think we could have a little bit more to decline in Bitcoin if we get any more bad news. But I'm also starting to think, like, with all of the bad news that has come out in the last 6 months, if this is the worst of the news, like, I can't really imagine a whole lot more bad things happening in the industry. If this is the worst of it, could we be at the bottom? That's just the question I'm posing right now. I don't think we have enough evidence to say that yet, but it could be very, very interesting. Now, when it comes to earnings this week, back to the stock world, we have a couple of different companies reporting earnings, lots of software companies. We've got Oracle, we've got Adobe, we have got Loop and Braze. These are two new companies that I've been diving into a little bit here. And we got a couple of other companies. Weber, my favorite barbecue company, is reporting. So lots going on here, but the big story and the big thing that we need to focus on is the Fed meeting. The US, basically Federal Reserve, is meeting on December 13th and 14th to decide what they want to do with interest rates. We are expecting interest rates to increase, likely by 0.5 or 0.75%, basically because of the situation, and we haven't really seen any of their key indicators change in the last little while. We are also seeing some confirmation from Canada. The government, or the Bank of Canada, chose to raise interest rates by 0.5%. So it's quite likely that we're probably going to see something similar in the United States. Now, when it comes to stocks that I'm watching this week, we are going to go through 5 different stocks today. The first one here being Airbnb. I'm interested in Airbnb because we've got a very, very clear double bottom right at the exact same $86 level. We have a descending wedge. You can see the resistance on the top here, and 86 is acting as support. So we are looking for either a breakout of this resistance line, basically on the top here, a breakout to the upside with good confirmation from other indicators and the economy, or we are looking for the price to break down below $86, in which event I would be interested in shorting the stock. Now, next one here is Shopify. Shopify is really, really interesting. Shopify stock has just been absolutely hammered over the last year. They're one of the biggest losers of the year. And I'm starting to think maybe it's a little bit undervalued. You can see that we traded sideways here for almost 6 months now, like literally sideways, and it looks like we are starting to test our upper level right here. We have a short-term bullish trend where we have got like 4 consecutive higher lows over the last 2 months here. We are now approaching the resistance level right here around this, I want to say $55 level. And if we can break above 55 and set a new high, I think that's going to be a very good sign for Shopify, and I would be very interested. Now, one company that's actually burned me a few times this year is Udemy. I've got in and I've got out, and I have not made money on it. So I caution you with this one, but the support and resistance levels here over the last sort of 6 months to even a year have just been super, super strong. You can see we've got major support around $10 here. You could call it $9.50 to $10 on the bottom side. And we got some pretty major resistance between $16 and $17 here. Currently, we could be forming a double bottom at $12, but you would need good confirmation to buy the bounce here and show that it's not going to drop down to $10 here. Long term, I'm very bullish on Udemy and Coursera and most of these online learning platforms. I think it's only going to grow over time, especially with the rise and the ease of access to high-speed internet. Now, the last two companies here, first one is Palantir. PLTR is the ticker, and this one's really interesting because I think the stock got as high as like $38. Now it's trading at like $7. The growth of the company has also slowed. They haven't necessarily met expectations, so that is like a little bit of a worrisome thing here. However, the business model and the cash flow of the company is really, really good. Now, the reason I'm interested in the company is because we have bounced off this $7 level here like 5 times, 3 times in the last month and a half, and another 2 times here in September. And so really, really interesting trading pattern here from Palantir. As long as $7 holds up, I am a buyer of Palantir on the bounce and the strong momentum, especially if we see some volume here and a couple of catalysts. I really like Palantir, but if we fall below $7, that is a quick exit and a quick stop loss and possibly even a shorting opportunity. I'm worried that it fell down to $6.44 here. Like there's definitely some room below $7, but I like $7 for the bounce off of it if it happens. This is one that you definitely need to be patient with. Last one here is Tesla. I like Tesla right now. It's down from highs of $414, now trading at $182 it looks like right now, $179. And so I like the stock. We found clear resist or support at this level back in 2021. We are now retesting this level. We have consolidated for a couple of weeks here, basically a month, right around this $180 level. And if we start to see some positive momentum and basically break above 200, that's probably going to be my entry point. I like Tesla long term. I think they're doing well. They're actually selling at a reasonable price to sales ratio of 8 now. The forward price to earnings ratio is 32, but the company's also growing pretty quick. And I'm actually a huge fan of the robot that they are developing. I think that could drastically bring down their costs, and I think it could really change the way that manufacturing companies operate in the long term. It's not something that's going to make an impact at all in the next few years. Well, in the next year probably. Now, if you guys are interested, definitely consider checking out my free course on SkillShare. It's called Stock Market Fundamentals, and it walks you through how to do basically everything I just did and evaluate the fundamentals of the company. There's over 16,000 students that have taken the course. It is completely free, and you get a 1-month free trial with Skillshare when you use the link in the description to this video. There's 418 authentic reviews for you to read through and see if it's worth your time. It's only 10 hours long, so you can do it in a weekend, and I promise you it'll be the best free resource, and it will change your life if you have never been introduced to the stock market before. There's over 2.2 million minutes of watch time that has been spent on the course. That's how much time people have spent watching it, and I highly recommend checking it out. It's totally free, won't cost you anything. You will need a credit card to sign up for the trial, but cancel your subscription in under 1 month. You get access to the entire platform for free. If you got any value out of this video, please remember to click that like and subscribe button. I sincerely appreciate it, and we will see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.